Something big is happening in the U.S. housing market, something you're not supposed to notice.
Blackstone, one of the largest corporate landlords in the country, is quietly dumping homes. And in Florida, they're slashing prices by as much as 30%. That's not a typo, 30%. We're talking about the same Wall Street powerhouse that bought thousands of homes after the 2008 crash, now unloading them faster than ever. Why? What do they know that we don't? Do you think Blackstone knows something the rest of us don't? Or is this just smart timing before a housing crash? Drop your take in the comments. I'm reading every one of them, and I want to hear what you think. If you're trying to buy a home, rent one, or just make sense of this insane housing market, this could be the signal you've been waiting for, or the warning you need to hear. By the end of this video, you'll know why Blackstone is bailing, what it means for your city, and how you can either take advantage of this shift or get crushed by it. After the last housing crash, Wall Street didn't retreat, they took over.
Blackstone, through its subsidiary Home Partners of America, began buying up single-family homes by the thousands. Neighborhoods in places like Tampa, Atlanta, and Phoenix were transformed overnight. Homes that could have gone to first-time buyers were snapped up by corporate landlords, turned into rentals, and held for long-term profit.
Now, those same companies are reversing course. In Florida alone, homes once rented by Blackstone are hitting the market with eye-popping discounts. Some cut by 20, even 30%. And it's not just Florida. The sell-off is spreading across multiple states, particularly in areas where institutional ownership exploded during the pandemic.
So why should you care?
Because when investors this large move, they move markets. Home prices, rent prices, local inventory, it all shifts. This isn't just about a company shifting strategy. It's about the housing landscape potentially flipping fast. If you're renting, your landlord could be selling the home you live in. If you're buying, you might finally have leverage. And if you're investing, you need to know whether this is a crack in the system or just the beginning of something bigger.
Wall Street came into the housing market with money and muscle. But if they're heading for the exit, it's time to ask yourself, is this your opportunity or your warning? So what's really driving Blackstone to offload homes, especially in hot markets like Florida?
Because this isn't a random sale. This is a calculated move by one of the savviest real estate investors in the world. Let's start with the basics. Blackstone owns tens of thousands of homes through companies like Home Partners of America. These aren't just isolated properties. Their entire portfolios concentrated in high-growth metro areas. Tampa, Orlando, Atlanta, Charlotte, Phoenix, Dallas. They bought big when interest rates were near zero and demand was off the charts. Now they're reversing. And the first question is, why? One reason is insurance. In states like Florida, insurance premiums have exploded. Some homeowners have seen their costs double. For landlords with hundreds or thousands of properties, that's a financial gut punch. Rising premiums eat away at profit margins, especially when you're trying to scale operations. Then there's the cooling market. After years of sky-high appreciation, home prices are starting to flatten or even fall in some regions. Mortgage rates hovering above 7% have scared off buyers, and homes are sitting on the market longer. It's no coincidence Blackstone is cutting prices. They want out before the market corrects harder. These price drops aren't generosity, they're strategy.
And let's not forget cash flow. What made these homes attractive in 2020 isn't as compelling now. Rent growth has slowed, maintenance costs have jumped, cities are introducing regulations to limit institutional landlords. It's death by 1,000 cuts. And for a company like Blackstone, cutting losses early is the winning move.
There's also something bigger going on: reallocation. Blackstone isn't broke. In fact, they're shifting billions into new opportunities: data centers, industrial warehouses, even infrastructure. Those assets offer higher yields, fewer political problems, and better long-term stability. Compared to that, owning single-family homes across dozens of metro areas just isn't worth the effort anymore. But make no mistake, this isn't a fire sale. It's a chess move. Blackstone isn't running away in panic. They're moving before everyone else realizes the game has changed.
Here's where it gets really interesting. Blackstone also recently restricted withdrawals from one of its largest real estate funds, Bright. That means institutional investors are getting nervous. If too many people try to cash out, it creates pressure. By selling homes now, Blackstone can meet those requests without collapsing the fund. Again, it's strategic. They're managing risk while keeping control.
So, is this the start of something bigger? Possibly. Historically, when the big players exit, they don't come back quickly. And if other institutions follow Blackstone's lead, we could see a wave of properties flood the market, especially in the same metro areas where they all bought in bulk.
For everyday buyers and small investors, that opens a rare window. Prices could dip, inventory could rise, and homes that were locked in corporate portfolios might finally hit the open market. But it won't last forever. Once Blackstone finishes repositioning, they'll likely wait and watch, and so will everyone else.
It's worth noting that this isn't how mom and pop landlords operate. If you're an individual investor, you can't unload 500 homes in a quarter. You don't have the scale, the exit strategy, or the institutional backing. That's why this moment is unique. It's not just a company selling homes, it's a giant shifting weight. And that shift has ripple effects for everyone else. To understand where we're headed, you have to look at where we came from. In the aftermath of the Great Recession, Wall Street flooded the housing market with capital. They bought foreclosures, outbid families, and changed entire neighborhoods. For over a decade, they drove prices higher by removing inventory from the hands of traditional buyers. Now, for the first time in years, they're putting that inventory back in. Not all of it, but enough to matter. And if you're paying attention, that might be the most important signal of all. Are you seeing homes sit longer in your area? Or is the market still red hot where you live? Comment below and share your thoughts. Let's compare what's really happening in different parts of the country.
This isn't just a Blackstone story, this is a wake-up call. Because when a company that helped shape the post-crash housing market suddenly changes direction, it's not just a headline, it's a signal for people like you and me. If you've been locked out of the housing market, watching from the sidelines as prices climbed and institutional buyers outbid regular folks, this might be your chance to get in. As Blackstone lists homes they once held for long-term rental, we're seeing more inventory hit the market in places that were starved for supply. And these aren't just slight reductions. We're talking homes discounted by tens of thousands of dollars. But before you jump in, take a breath. Not every discounted property is a good deal. Many of these homes were rented for years. That means deferred maintenance, outdated appliances, and the kind of wear that doesn't always show up in pictures. You need to inspect these homes thoroughly. You need to compare prices in the same zip code. And most importantly, you need to understand why it's being sold now and what else might be coming down the pipeline.
If you're a renter, especially in one of these homes, don't assume your situation is stable. Some tenants are discovering their homes have been listed without much notice. Others are getting non-renewal notices before they've even thought about moving. Now is the time to get informed. Talk to your landlord. Review your lease. Understand your rights under local tenant laws, because your home might be part of a spreadsheet, not a long-term plan.
And if you're a small investor, this is where things get interesting. Blackstone's exit could create opportunity, but it's not a green light to jump blindly into the same markets. Rising costs, especially insurance in states like Florida, are still a threat to profitability. But if you stay disciplined, run your numbers tight, and stay focused on long-term fundamentals, you might be able to pick up properties that were previously out of reach. This shift isn't just about cheaper homes, it's about leverage. For the first time in years, the balance of power might be tilting back toward individual buyers. The only question is, will you be ready to take advantage of it? Blackstone's exit isn't just a business decision, it's a signal. A company that built its empire snapping up homes after the last crash is now quietly unloading them, and in some cases, taking steep losses to do it.
That should make you pause.
This is more than just a shift in portfolio strategy. It could be the first domino in a broader pullback by institutional investors who once dominated the housing market. And when the big players move out, history shows it's usually the everyday buyer who either wins big or misses the moment. So ask yourself this: Is this the early warning of a housing correction, or the rare window you've been waiting for? Because whether you're a renter wondering what happens to your lease, a first-time buyer looking for your shot, or a small investor hunting for value, what happens next could reshape your financial future. And hey, if this video gave you a new perspective on the market, hit that like button to let me know.
Subscribe and turn on notifications so you don't miss what's coming next, because I'm breaking down the one factor that could flip the housing market upside down. And most importantly, drop a comment below. Let me know what's happening in your city. Are prices falling, holding, or still climbing? I want to hear your take.